We've had operating profit coming under pressure, down 25.3%. Also, as I said, HEPS dropping down by a very similar margin there. It's been a tough year for construction players generally, though. What are your major pressure points as a road builder?
Yeah, I think rightfully it's been tough for us all. But in the road space, we're fortunate. We actually have some work. There's volume. What we don't have is pricing. As you can see in the operating margins, the pricing has been shocking and continues to disappoint. And the answer to that is deteriorating margins.
The trending lower that we have seen on that front, though, possibly responsible for the fact that we had a smaller contraction in your order book, so showing that that's possibly the competitive tool or the competitive advantage that you hold at this stage.
Correct. Strategically, we're not really trying to grow that order book too substantially. We need to see where the cycle goes first, because should the cycle turn upwards at some point, one doesn't want too much work at these margins. But having said that, there's certain dynamics one's not sure about. So, one's staying close to the fire and making sure that, you're maneuverable should the time allow.
Well, talking about maneuvering, I mean, you've made an attempt to diversify your earnings base, exploring opportunities in the growing Indian road sector as well, together with UB Engineering. Just run us through that strategy and the kind of opportunity the likes of an Indian market presents for your company.
Well, the market is enormous. Where we're currently at, we're really seeing it as an exploration. We've got fantastic partners. We're very proud that they're our partners. We're pre-queuing on certain work and seeing where that takes us. The real proof in the pudding will be what the pricing delivers. The fact that there's enough work, an enormous amount of work, and that it is a possibly gigantic leap for our company, that's a given. But it needs to be profitable. And the next 6 months will probably determine as to whether India is a market we will be operating in or not. And the answer to that is going to be the results of tenders as to how profitable we believe they will be and at what margin one needs to work there.
And one can only assume that standing testament to the fact that work isn't a problem is the fact that you're a company that's operating at full capacity right now.
Correct.
Okay, well, let's take it to African opportunities, because on the continent itself, we're looking at a JV with Sanyati. It's produced the lowest tender on contract in Uganda. Is that the kind of approach you're taking when it comes to strategy in Africa, or is this more a once-off basis?
No, I'd say this specific contract is once-off. We've been in Africa for quite some time. I know it's the flavour to talk about it now, but we've been in Zambia for 8 years, Namibia for a couple, Malawi now more recently. Uganda is actually work that Sanyati originated and have requested us to join them as JV partners to execute the work. The work's not actually awarded. One needs to be clear on that. It is in the final throes of it. We are optimistic that it will be, but until such point, we're cautious. But JVs we do if necessary, and in this case we were invited in. It's not something we generally explore by default.
How are you weighing up risk versus opportunity when it comes to doing work on the continent? And I ask because operations in Zambia had been curtailed, and you've had quite a cautious approach adopted when tendering in that country specifically, with careful consideration being made to currency and then of course funding issues as well.
Yeah, well, we do our homework as much as we can. I mean, Zambia we had fairly serious payment problems a year ago. All those payments have been caught up. Where there's a risk which is very difficult to manage in Africa, in our business, is currencies. A lot of the African currencies are not liquid enough to enable us to hedge them. So what we are trying to do is get as much of the bigger contracts as we can priced in hard currencies with guarantees issued accordingly, purely because that is a liquid enough environment given the rand's tradability that we can actually hedge that back to the rands. But it's going to be something we will have to live with, and it is going to be something we're going to have to manage daily in our exploration in Africa as the years goes on.
Outlook for the road ahead, because we know that the second phase of the Gauteng Freeway Improvement Project is still anticipated to happen. But what's your focus, given that the general construction market is expected to remain depressed?
Yeah, our view is the next 12 months is going to continue to be depressed and going to continue to be challenging. In our space, there's a few things, the Winelands, the G52 as you've referred to, etc., which are really mega road projects, which we wait with, with holding our breath, because clearly the tolling controversies that's taken place in the country as of late, may or may not impact these things as well. We obviously hope they don't. But that, in my mind, is possibly the catalyst we wait for, albeit that those sort of mega projects are still 12 to 18 months out. Till then, you know, it's going to be fairly tough at home.